Good morning. Welcome to another episode of BuyPoint ASX. I'm Mac in Oz. This morning we're looking at the eponymously named Goodman Group. And the man you can see here is Gregory, call me Greg, Goodman. And he is very much the centre of what is going on at the company named after his family. So here is the fundamental chart, basic black I call it, and you can see that the Goodman Group, being a commercial and industrial property management company, suffered the predictable calamity along with all the rest of us back in the GFC, but since then the company has managed to sustain pretty much continual growth. The fundamental, or one of the fundamental elements of the companies that I'll be recommending are companies the charts of which you can look at and ask the question, do I think this company has seen its all-time high price? Because if you think a company is going to grow over the next 10 or 20 years, why would you not invest in it? And here's the more simple chart of the period which has presented the great challenges for especially commercial real estate property companies, but also industrial real estate property companies to a certain extent, the time since COVID. Unlike many straightforwardly commercial property companies, you can see that Goodman survived the post-COVID period pretty well. It then went into a bit of a slump and has since come roaring back up until the time that the Orange Man took over in Washington. So the question is, what lies ahead for Goodman and why am I recommending that you consider buying it? Here is the more detailed chart of the last 18 months. Now, as you will become familiar with, this is all about buy points, and you can see that there have been a number of buy points in Goodman's recent history, and it is approaching another one now. And the simple explanation for this chart that I'll suggest to you once you have a look at the company is that this line here represents the market's realization that Goodman was transforming itself into a data center company. The company had been essentially going sideways for some time. The market realizes that they're building data centers, then they start wondering when those data centers are going to become optional. The Orange Man arrives and everyone fears the worst, correctly, but now Goodman has climbed out of that trench, and what we're looking at is what is likely to happen with the company over the next 10 or 20 years. And here's the specific recent chart showing, as I said, the very many buy points that the Orange Man created as the market slumped under his influence, the recovery when everyone realised that Trump always chickens out, and then this relatively natural progression towards the MACD lines going below the zero line. Now, if you look at the chart, it looks like it's going sideways. The focus for BuyPoint ASX this year is not only relying on MACD indicators of likely potential growth, but also other indicators which give us an insight into companies which are about to break out after a period of consolidation. What the experts tell us is that one of the ways that you can anticipate a breakout after a period of consolidation is the exhaustion of the liquidity around the stock. So the volume gradually peters out. Now, that isn't exactly the case here, and it is something that I, for one, find hard to assess, but definitely you can see that over the last 6 months, until quite recently, the volume has been dropping significantly in trading on the company. Now, here are the company fundamentals, and you can see that there was not a lot to recommend the company going back towards 2016-17. They, as I've said, had a surprisingly strong reaction to COVID, and then realisation struck as to the future of commercial property, with everyone working at home, and we saw earnings plummet. Investment income has remained relatively stable and has started to pick up. It is one of the biggest companies on the ASX with a market capitalisation of about 70 billion. Like many companies at the moment, the PE ratio isn't anything to write home about. The dividends, nothing to write home about. But overall, the company's financials seem to be relatively solid and improving. And this is why. If you look at the description of the company in things like the ASX coverage, they talk about commercial and industrial property. But what this company is being transformed into, and if you believe the hype from the company website, it's all the result of the insight and genius of Greg Goodman. What they're moving into is data centers. And if you go onto their website, you will see this rather cute picture tells 1,000 words presentation, where when they want to tell the world about Goodman, what they show you is a photograph of absolutely ginormous data centers, with the small type that you've got to look at closely to see that they own, develop and manage high quality sustainable logistics properties and data centers in major global cities. This is a global company, which is an excellent feature of the growth of the company, and they are making themselves, as they say, critical to the digital economy. Because this is a reality. In Australia, we don't have a lot of bona fide tech stocks. No Nvidias, no Metas, nothing like that. So if you're looking to invest on the ASX in tech, then the best option you have is to invest in a company which is creating the infrastructure for that tech, because without data centers, essentially there is no information technology, there is no AI. And that's the reason why I'm confident that Goodman has a very strong future of growth and profit. Here's the disclaimer. Thanks for watching. See you tomorrow.